Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily TSLA report for Wednesday, May 21st, 2025. Let's take a look at the charts. This is the 2 to 3 week time frame. We have been, actually for the last week, been testing what was a targeted resistance area that came into being following a buy signal that occurred about a week and a half ago when we pushed through an area upper 280s to mid 290s, closed above it. We had this as kind of a 1 to 3 week target depending on volatility. Volatility kicked in and realized it in about 4 trading days. We're still here, still testing it. In fact, we put out a new pullback high following that April low on Tuesday, 354.98. This is a range, 351.39 to 358.02, that is narrowing daily as we move through the rest of the week. It is the zone that we need to close above to set off yet another significant buy signal. That one would be even more meaningful than the one that occurred a little over a week ago. That should then yield as we continue through time. Initially, I expect 383.76 as a 3 to 5 day target. 427.01 as a 2 to 3 week objective. Could take a little longer. 427.01 is a significant level on the daily chart. It is the low of the high. And if you recall back in December, we put out a significant key reversal high, new all-time high, and we fell apart and closed clearly below the previous day's low. That was by one measure a significant sell signal, if you recall from the videos back then. And that is an area that is a 2 to 3 week target if we close above 358.02. But longer term, if we close above 358.02, I would anticipate bullish continuation in the months ahead, possibly by the end of the year to 513.90. 513.90 is a 5-year channel top. We came close to testing back in December. It was considered an objective following a November 24 buy signal above this 2-year channel top that we presently find at 351.51. We also at 351.39 find a 50% upside retracement from the December high against the more recent April low. So the lower 350s are of equal significance to the 358.02 speed line. It's just that I'm not comfortable buying Tesla unless we close also above the speed line. And as we continue into later week, that 358.02 speed line will correlate well with like the 3% violation threshold that I like to use on long-term line studies. It really is, and there's only a few days left, but yes, I don't think you should stay long with the settlement today, Wednesday, above 358.02. And if you, stay short below 350. Let me back up a little bit. I don't think you should stay short if you are already. If we close today above 358.02, I think you should exit a short position if you are short, if we close above 358.02. The question begs, should I then go long? And I think you can ease into a long position. We could get a nice rally up to 383.76 perhaps by Friday's close under that scenario. But it really is, with these longer term signals, one that is potentially capable of reaching 513.90 over the following 3 to 5 months, that it is the weekly settlement that has finality. So I would want to see how the week plays out. Now, you could go all in on the long side if we close today above 358.02. All in on a 3 to 5 day buy signal, up to the 383.76 5/8 Fibonacci, for instance, or all in on a 2 to 3 week buy signal up to 427.01. But you could also go in partially, let it play out for a few days. And yes, if we close Friday above 358.02 descending 2/3 speed line, then you can go all in. Whether you're a 3 to 5 day swing trader up to 383.76, a 2 to 3 week swing trader up to 427.01, or more of a near term investor with 3 to 5 months up to 513.90. But none of this has happened yet. And in fact, the likelihood is that we'll continue to grow overbought, or should grow overbought. I know we had a pop yesterday and a couple of Elon Musk news items. But this is still an important resistance area, and holding below it will keep 291.82 in reach over the next 2 to 3 weeks. On the way down, I do have, a couple of things. Number one is really 335.86. This is, I would normally call this kind of a session containment, and you might consider it depending on what kind of trading you do. But I'm keeping it light here because of the fact that we've been testing long-term resistance and falling away. And so there is the possibility of breaking 335.86 intraday. And under that scenario, we just might reach 316.95 by the closing bell. We've seen those days before. Certainly, you don't have to go back far on the chart to see that kind of volatility. The likelier outcome, I think, at least at this point in time, in terms of the relatively reduced volatility, is a settlement today below 335.86, indicates 316.95 within a day or two, where we could place a daily low and perhaps from here round back up to the 351.39 area roughly within the following 3 to 5 days. But I've looked at this chart two ways. One is, and I think that there's equal value in the second scenario, and that is to say that if we close below 335.86, after testing the significant overhead resistance in the low 350s, as I mentioned, that could be your go with sell signal on weakness. And as I say that, that actually feels better to me, to be perfectly blunt. I don't know if you can really count on 316.95 holding a 3 to 5 day low with aggressive bullish rotation back into the low 350s. I do think after testing this longer term resistance in the low 350s, a settlement today below 335.86 is your go with sell signal down to 291.82, which we are expecting anyway over the next 2 to 3 weeks, holding below the 351.39 area. It's just that a settlement today below 335.86 is just sort of kicks that off to the downside. And certainly there will be hesitation at 316.95. I think what may play out is if we close today below 335.86, this formation becomes your session containment ceiling on Thursday. 316.95 becomes more of an intraday support level that may hold for a good part of the day on the way down to 291.82. I hope that all made sense. I think it should. 291.82 at this point in time, able to contain selling into June trade, possibly well into June trade. From here, we could round back up into the low 350s again over the following 2 to 3 weeks. And finally, it would be a settlement several weeks from now, for instance, that below 291.82 that would then set up the possibility of long-term 5-year channel support in the upper 150s to mid 160s. I don't expect to see this area unless we were to close below 291.82. And then I think it's in play. Yes, we'll fall back into this low 215, 220s within 2 to 3 to 5 more weeks. And we could spend a fair amount of time bouncing modestly. But I do think the settlement below 291.82 is your indication to don't be long Tesla as we move into the third quarter below 291.82, because we do think that the upper 150s to mid 160s in reach within a couple of months of doing so. And inversely, closing above 358.02, do not be short Tesla as we move through June and into the third quarter, expecting 427.01 within 2 to 3 weeks and within 3 to 5 months, that 513.95 year channel top. This week, and actually the last few weeks, wickedstocks.com has put out some stock picks on Rubrik, GitLab, Wingstop, Landbridge. I could go on, 2 every week. We also put out daily SPY and daily triple Q analysis, weekly Apple stock analysis. You can see it all for free by going to wickedstocks.com and taking advantage of our 5-day free trial. A single subscription price provides all of that to you every single day in the stock picks throughout the week. So check out wickedstocks.com. Take advantage of our 5-day free trial. I will be back tomorrow, of course, with Thursday's Tesla. You have a great day.